Welcome to the deep dive. Today, we're looking at General Motors. Some pretty big news dropped recently.
Yeah, that's right. We've got this Motley Fool piece that really digs into a key decision GM made.
And we want to unpack what it really means, Why should you care if you're maybe watching the markets or the auto industry or just how big companies handle, well, uncertain times?
Exactly. We'll try to cut through the noise, get to the core of it for you. No jargon, just what's happening.
Okay, let's jump in. So Tuesday, April 29th, right? 2025. GM puts out their first quarter earnings.
Standard procedure. But there was more going on.
Yeah, definitely more. What else happened?
Well, first they pushed their earnings call back to Thursday.
Yeah.
Said they needed clarity on tariffs.
Tariffs? Okay.
And then, maybe the bigger thing, they said their previous financial guidance, no longer applicable, pulled it because of those same tariff worries.
Wow. Okay. Pulling guidance is significant. And wasn't there something else about buybacks?
That's the other shoe dropping. They announced they're suspending their share buyback program.
Okay, so delaying the call, pulling guidance, and stopping buybacks. That feels like a lot of caution packed into one announcement.
It really does. But here's the slightly confusing part, maybe. The actual Q1 results, they were pretty good.
Right. That's what struck me. The numbers themselves look solid, didn't they?
Yeah, better than expected, actually. Revenue was up, 2.3%, hit $44 billion. Analysts were thinking more like $43.2 billion.
Okay, so top line beat expectations. What about earnings?
Same story there. Adjusted earnings per share climbed 6% to $2.78. Again, beat the consensus, which was around $2.66.
And they even bumped the dividend, I saw.
I did. Small increase, but still, from $0.12 up to 15 cents per share.
So, okay, let me get this straight. Good quarter, beat expectations, raise the dividend. But they're also saying, hold on, tariffs look scary, we can't promise future results, and we're stopping share buybacks. That's interesting.
It is. It raises that big question. Why the sudden brake pedal when the car seems to be running fine right now?
So why are buybacks such a big deal for GM specifically? The Motley Fool article dives into this, right? The sort of bull case for the stock.
Exactly. It gives some context. See, GM stock, historically, well, it hasn't exactly set the world on fire compared to the broader market.
Yeah, it's often seen as kind of a laggard. Why is that?
Well, the article mentions a few things. Slow growth perceptions, obviously. Big fears about disruption from EVs and autonomous driving.
Okay, the classic auto industry worries.
Right. Plus, it's a super capital-intensive business, very cyclical. And, the shadow of the bankruptcy back in the financial crisis.
Yeah.
That lingers for some investors.
Gotcha. So all that means the stock tends to trade at a low valuation compared to earnings or book value.
Precisely. Kind of like its peers, Ford and Stellantis. They all trade at these relatively low multiples.
But here's where it gets interesting regarding returning cash to shareholders, right? Ford and Stellantis have pretty hefty dividend yields.
Yeah, really significant yields.
Yeah.
The article pegs Ford at 7.5% and Stellantis at 8.2%. That's a substantial income for shareholders.
And GM, even after this recent little hike, their yield was, maybe 1.3% before, still way lower.
Much lower, yeah. And that's the key point the article makes. For a value stock like GM, without that big dividend yield, share buybacks become really, really important. It's the main way they return capital and, importantly, boost those earnings per share figures. Fewer shares means each share gets a bigger slice of the profit pie.
Right. Makes sense. And GM has been doing a lot of buybacks over the years, haven't they?
Oh, yeah. Quite consistently. The article cites data, I think from Y-charts, showing they've bought back about a third of their outstanding shares over the last decade.
A third? Wow, okay. That's significant.
It really is. A huge amount of capital returned that way.
So now we see why suspending the buyback program is such a big deal.
Exactly. The Motley Fool piece puts it bluntly.
Yep.
It potentially removes, and I'm paraphrasing here, maybe the best reason to own the stock for a certain type of investor.
That's a strong take. Why is the suspension seen as potentially so negative, beyond just not getting the buyback money?
Well, it sends a signal, doesn't it? It could suggest that maybe management inside GM isn't feeling super confident about generating enough profit going forward, especially with these tariff clouds looming.
So it's a confidence signal, or lack thereof?
Potentially, yeah. Is this just a temporary pause while they figure out the tariffs? Or is it something more? Like, are they hoarding cash because they see a recession coming?
That's a sobering thought.
And if it's not just temporary, if they keep buybacks suspended for a while, That could really hit investor sentiment. It makes the stock look less attractive, especially compared to Ford or Stellantis with their big dividends.
Because that buyback yield was a key part of the investment thesis.
It was a huge part. They didn't offer the dividend yield, so the buybacks were how they, sweetened the deal for value investors. Now that's off the table, at least for now.
And the timing, it's almost like ironic, isn't it?
How so?
Well, the article points this out, too. This decision comes not long after GM finally pulled the plug on Cruise.
Ah, right. Their autonomous vehicle unit, which was losing a lot of money.
Billions, reportedly. So the thinking was, okay, stop the Cruise cash burn. Maybe that frees up capital for, well, maybe more buybacks.
Yeah, that was definitely a line of thought out there. Close Cruise, redeploy capital. But instead, they suspend the buybacks anyway.
It really underlines how worried they must be about those potential tariffs or the broader economy, more worried than they were about the Cruise losses, perhaps.
It certainly seems that way, based on these actions. The tariff uncertainty appears to be the dominant concern right now.
So let's try to wrap our heads around this. We've got GM, reported a strong Q1, beat estimates. But at the same time, they're slamming the brakes on buybacks, pulling guidance, delaying their call, all because of tariff uncertainty.
That's the picture. It's a mix of good news on recent performance, but quite a bit of caution about the future.
And until they actually have that earnings call and explain things further, this pause on buybacks looks potentially, well, bearish, negative for the stock.
That's how the market often interprets these things, yes. Especially given, as we discussed, how central those buybacks were to the GM investment case. The strong present performance just makes the cautious outlook even more puzzling, maybe.
Okay, so let's summarize this for you, the listener. GM's Q1 earnings. Pretty good. Actually beat expectations.
Right. But the big story is the caution. They delayed their earnings call, pulled their financial guidance for the year,
citing worries about potential tariffs.
And, crucially, they suspended their share buyback program.
And that last one is key, because for a stock like GM, lower dividend than rivals, considered a value play, those buybacks were a major way they returned cash and boosted per-share numbers.
Absolutely. So stopping them raises real questions. How confident is management really about future profits if these potential economic headwinds like tariffs hit?
Yeah, and thinking bigger picture, this whole situation really shows how things like trade policy and tariffs can directly impact even huge companies, right? Affecting their strategy, how they give money back to shareholders.
Definitely. And it highlights how investors weigh different things, dividends versus buybacks, when they're looking at a stock like this. Different investors prioritize different return mechanisms.
So maybe a final thought to leave you with. GM is being cautious, even after a good quarter. What does that signal about maybe the wider economy? Are other big companies feeling this uncertain too?
That's a great question. Could this GM move be like an early warning sign? We'll have to see if other companies follow suit as more earnings come out. Definitely something to keep an eye on.
For sure. Well, thanks for taking this deep dive with us today.